Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Elanco. On Thursday, November 7th, Federal Reserve Chair Jerome Powell delivered news on yet another round of interest rate cuts. In the September meeting, the U.S. Central Bank slashed the benchmark interest rate by 50 basis points, establishing the first rate cut since interest rates were forced higher in March 2022. The November rate cut this week brought the federal funds target rate down another 25 basis points, lowering the range of the Fed target to between 4.5 and 4.75%. Policymakers are signaling at least one more 25-point basis cut by the end of the year, and are currently pricing in another 100 basis point decline through year-end 2025. That said, the Fed chairman stressed the point the Fed is not on any preset course. Instead, they will continue to make decisions meeting by meeting. The 2024 presidential election earlier this week had established Donald Trump as the 47th president of these United States, and with the change to the new administration comes a full overhaul of economic policy. According to comments at today's Fed meeting, Powell was quoted to say, "In the near term, the election will have no effect on our policy decisions." As an independent entity, the U.S. Federal Reserve Bank maintains a separate relationship with the U.S. executive branch. The president has no authority to remove or demote the acting Fed chairman, and Powell suggested on Thursday he would not step down as Fed chief if asked by Trump to resign. Although, actions taken by the U.S. executive can have major policy implications for the Fed, especially as it relates to trade and tariff policy. The Trump administration has authority through the U.S. Trade Representative to fashion tariff policy as it sees fit. While on the campaign trail, Trump policy proposals included a 10 to 20% tariff rate increase on all imported goods, as well as an additional 60% tariff on imports from China. This tariff policy would increase general import tax rates to the highest level since the Great Depression, and would almost surely drive inflation higher as taxes get passed on to the consumer. Inflation and interest rates affect the cattle markets at the consumer demand level, but also have influence at various points along the supply chain. Expansion at the cow-calf level is driven primarily by economics and capacity. Interest rates have a direct impact on restocking decisions, as the cost of credit influences the price a rancher is able to pay in cow costs. According to data from the annual CattleFax cow-calf survey, the amount of capital required for a cow-calf operation today is roughly 2.5 times higher than when compared to the year 2000. Thanks for watching. Remember to visit CattleFax.com, become a member, and see the latest market news and analysis.